Even if you think you're trading for free, there's a catch. The bid-ask spread is one of those hidden costs. It can quietly chip away at your returns without you even noticing. Imagine buying a stock at one price only to sell it for less. That difference? It's the bid-ask spread doing its thing. So keep an eye on those spreads, folks. They can eat into your profits faster than you think. Stay informed and make your trades work for you.
Our last point today is an educational topic, breaking down the bid-ask spread. What can you educate us on?
All right, so just like everything in life, stock prices are quoted with a bid-ask spread. Now that might sound a little complicated. It's actually not. The bid is the highest price somebody's willing to pay. The ask is the lowest price at which somebody's willing to sell shares. So let's use an example for, a stock that just traded at $50, and let's just say it's quoted 50 and 50 and a quarter. What that means is that you have people bidding, they're willing to pay $50 for that stock. You have people willing to sell at 50.25, right? $50.25. And that's all that it is. And so when that's your bid offer spread, $50, $50.25. When there's overlap, a trade takes place. So if somebody says, well, wait, I don't care about the quarter, I'm willing to sell at $50, a trade takes place. Or if somebody wants to buy and they say, I'll pay the extra quarter, a trade takes place on the offered side. And so this is no different, and Howard, you'll have comments on this in a bit, but it's no different than if you were to try to sell your house, right? If you're the seller, you say, I'm willing to sell for this price, a high price. And a buyer might say, yeah, we don't want to pay that price. We'll pay you a lower price. A deal will take place when there's overlap. And typically there will be a few rounds of negotiation where each round the seller would say, okay, I'll take a little bit less. The buyer says, okay, I'll pay a little bit more. When I bought my house, we did 3 rounds. We were done in a day because I thought the sellers were being reasonable. And eventually, we came to a price, and that's all it is. The one thing that I will caution investors about. So at Deep Knowledge Investing, we are typically looking for stocks that can go up by more than 100% over a multi-year period. Sometimes we've had stocks that have gone up 3x or 4x or more in certain situations. And in situations like that, it doesn't really matter, if you pay the extra quarter or not. And I don't typically spend a whole lot of time worried about the bid offer spread or whether I got the very best price. If something's going to go up 100%, 200%, 300% over a few years, it's not relevant. But for those of you who are doing more short-term trading, day trading, this is important, and you should view that bid offer spread as a cost of trading. So when you go to Schwab or you go to Robinhood and they say, hey, commission-free trading is free. It's not free. It's not free. They're selling that order flow to places like Citadel, or they're capturing that bid offer spread. And so if you're day trading or short-term trading, these kinds of spreads, your bid offer spread, just view it like you'd view a commission, right? If your Robinhood people say commission-free trading, but your spread is 25 cents, then just pretend you're paying a 25-cent per share commission. Right? It's just an expensive trading. And that's how I would recommend that people view it. Is it a big deal that you pay that 25 cents? Really depends on what your thesis is and how long.
It's complex. But the people that sign up for Deep Knowledge Investing can get your access to speak with you and talk through certain things. Is that correct?
Yeah, this is what we do all day, and I'm regularly corresponding with DKI subscribers and talking. And in fairness, we do have some really smart investors in our subscriber base, so people aren't really saying, "Hey, does it matter if I pay the extra dime?" They know it doesn't matter if they pay the extra dime or not, because we're looking across a multi-year time horizon. And if people, say, hey, should I pay the offered side on this? My response is, I don't know, because I'm not really thinking about this stuff as a day trade. Where we tend to get a little tighter with stuff like that is every now and then I see an options trade that is just really mispriced. And that's something where, you have to trade it a little more tightly. And I'm buying something because I think it's going to move in the next couple of weeks or next couple of months. In situations like that, the pricing does matter more. But when that happens, I send out an urgent email to all of the subscribers and to tell them, I just bought this option just now. This is exactly what I paid. And, then they have that as a mark.
Well, understanding these principles are paramount to actually investing properly and not losing your money or your mind at the time. So it's a benefit of actually joining up and being a member of Deep Knowledge Investing that could help people through these types of situations, right?
That's what we're doing all day.
Yeah. Well, I know you've helped me before. We've talked through a number of different investments and I've always valued it. And that's not just because I'm part of your team. It's just that you have far more expertise than I do. If it was real estate, you would come to me and we would talk about investment. But when it comes to this type of analysis, you've got it covered. So I hope people will take you up on this.